Hi, everyone, and welcome to the week ahead. We've got a short one this week. We've got Albert Marko, and we're talking about a very specific issue that Albert's brought up on the show many times before. And I just wanted to make sure that we have a discussion on this specific issue because Albert's brought this up many times, and I want to make sure that we have the room to talk about this in detail. So, Albert, thanks for coming on. You sent out a tweet earlier this week where you said, if you followed me for the past few years and watched our podcast on Complete Intel, I have literally laid this out where oil and the long bond are correlated, where it's used to trigger bonds and rally the markets, yet still some hard-headed traders think the Fed can't do this. So, open stage, tell us about it.
It's, I think it was Gunlack that was like, oh, well, oil is correlated with the long bond like never before. And I'm just like, yeah, this is literally a script that's been written out where whenever oil decides to take a surge up into the mid 80s and threatening the 90s, and then all of a sudden everyone's talking about oil to $100 or whatever, right? The Fed's trade desk team crushes it. Absolutely crushes it back into the 70s, right? Well, that helps CPI data for the next run, right? However, what it also does is it puts a bid into the bonds, right? The bond market, where the long bond specifically, which, I mean, really the Treasury and the Fed are the ones buying it. Nobody else is. And that triggers techs to rally. They can use the dollar by lowering it. They can use the VIX by crushing that too. But they had these tools where they can play seesaw, like use this or use that to rally the market at will, right? And this is all they're doing. It's not that complicated. You have to get away from, your fundamental view of how economics was taught in the 80s and 90s and
Efficient
2000s.
markets hypothesis.
Yeah, the free market stuff. It's like, come on, man. Like you can't look at this market at this moment and say that anything is fundamental about it in any respect at all. Right? There's nothing fundamental. We shouldn't be here. 7 stocks shouldn't be rallying the market, 1,000 points. It just doesn't work. It doesn't make any sense unless you understand that this is a political game, and that's just where we're at right now in the world. And if you can't understand it, you're going to get burned. Plenty of traders have gotten burned trying to be cute bears, thinking that the Fed's going to lose control. The Fed has all the money in the world.
Right, because from a pure markets perspective, what's happening doesn't make sense.
Of course it doesn't make sense, right? This market has no business being at 50, 5,400 and whatever it is, right? There's no business being here. NVIDIA, that doesn't make a goddamn thing, has no business being at $130 a share, right? After a 10-to-1 split.
$1,300.
Yeah, it doesn't belong there. So when people say, oh yeah, well, this is, look at this chart and that chart, I'm like, your charts get blown out from week to week. And then you come back and say, oh, yeah, well, now that was an outlier and this is what's happening. No, it's not what's happening. This is an election year. They want the market up. They're going to do whatever they can to keep the market up. They can sit there and lie to the bondholders. They can sit there and lie about all the data. But the reality is we're going to probably go up to 5,700 and, just touch it there, 56, 5,700, just for political optics. There's nothing else that makes sense in this market.
So there are some very respectable people, Albert, who look at you and say politics has nothing to do with the markets. So
yeah, well, they're also 50% down in their portfolio.
Yeah, right? I'm not naming names. I mean, we've seen a lot of people come and go, right? So, but you've been persistent about this. I think I've watched you over the years where there are times when the markets drive the markets. There are times when politics drive the markets. And we're just in one of those times where politics drive the markets. Is that?
Yeah, that's exactly right. Now, listen, I was a fundamental guy and a bear thinking that the Fed can't do this. Yellen can't do this. There's got to be limits, so on and so forth. And I've gotten absolutely torched when I try to do that, right? I'm like, there's no way it could go over 4,500 because inflation will come back, right?
Yeah.
Well, inflation did come back and well, almost 1,000 points above 4,500.
Right.
You know what I'm saying? It's just like I was wrong at that time, and I just gave up fighting it. There are no limits for the near term, and that's just how it is.
Yeah. So what about the people who say, hey, look at nominal GDP? That's really what we should be looking at to drive markets. Is that, you know, are you looking at that at all?
No. No,
Well,
I'm
because
not.
what they're basically saying is that inflation doesn't matter, right? Top level nominal GDP is really what matters. Don't worry about real, meaning nominal, minus inflation. They're saying, look at nominal GDP, and that's really where stocks will go because that's where,
Inflation was zero. Tony, did you get the memo?
yeah,
We had no coming. Come on. I mean,
yeah,
this is silly. It's just silly hour. What they're doing.
right. Yeah, there's a piece out today showing that total home ownership on your monthly basis today compared to 2020, it's up 24%. It's 24% more expensive to own a home today than it was 4 years ago.
That's shocking. Actually,
It is shocking to own a
that's
home.
shocking.
That's not rent. That's not car payment. That's not
That's
food.
just your house.
That's
Yeah,
your
that's just
house.
your house to keep a
Yeah,
roof over your head.
yeah, that's right.
You
So,
know.
when I see 0% inflation, I know that's month on month. I know that's top line. I know, all that stuff, but still, we're still up 3.5% on a year ago. So is inflation conquered? I can't say that it is. It all depends on the time frame you're looking at, right? Pretty soon we'll be looking at inflation today versus yesterday. Is inflation conquered because things aren't higher today than they were yesterday? Because we've shortened the time frame for evaluation. So if you look at year on year, which is
Mhm.
traditionally what central banks look at to understand where inflation is, we're in the mid threes. But if you look at it month on month, it's zero. So, it's convenient perspective based upon how you win the argument.
Yeah. Listen, Tony, we can sit there and debate all these fundamental numbers of GDP and inflation and so on and so forth. But the bottom line is people are paying 20, 30, 40% more than 2020. And I don't care what numbers the Fed and BLS wants to throw out there. That is the reality. Look at the price of, to carry a home. Look at the price to buy a new car. Look at the price of food, right? Like, I don't care if gas is only $3.90. Nobody cares about that, right? Because you can rig that. But what about every single other piece of cost of living that's still elevated?
Yep.
You know, that's the fact of it.
Will we get to a point where we do see prices come down? I'm not saying back to 2019, but do you think, get to a point where, say, the candidates in the US election have to commit to bringing prices down to some level, 2021 levels, 2022 levels?
I don't know how you do that, to be honest with you, Tony. I just don't know how you do that. Wage growth is most likely here to stay unless you have mass layoffs, right? The price of products, I can't recall any time in history where corporations, reporting decent earnings or anything are going to cut back prices. I don't. I mean, they don't do that. I mean, they might cut it back 5-10% to appease whatever, but pre-COVID levels, that's long gone, man.
Well, you'd have to cut fiscal, you'd have to raise interest rates, so you need a new treasury secretary. I don't think that the Fed is opposed to raising interest rates if we continue to see inflation and strong labor markets. But there was a period in the early 20s post World War I where we saw rapid inflation, and then we saw prices come down a bit. This was before the Depression. This was kind of 1924.
Yeah, but just remember, Tony, we weren't the dominant global currency at that point, right? We were in multipolarity, and although it's a geopolitical term I use, actually it's an economic one also, right? You have issues, you can do that. Prices can go way up and way down when you're not the reserve currency, as we know from the emerging markets.
So with prices higher, and wages are higher, but they haven't caught up with inflation. So are we going to have to see rate cuts for people to be able to afford their lifestyles because they can then finance parts of their lifestyles?
I don't know, because that's a double-edged sword, right? You start cutting rates, you're going to have a third round of inflation, right? I mean, God forbid we're back up at like, 5 handle, 6 handle in inflation. Then what? Like, well, what jobs how are jobs going to keep up with that? We're struggling to keep it up as it is right now. How can the job wages possibly keep up with that, especially when you start having layoffs?
Yep. A lot of that started, I've spoken to probably
Hmm.
4 people over the past month who've lost their job, they're without benefits, this sort of thing. So I've seen a little bit of that start. I'm hoping it doesn't continue, but I've seen a little bit of that start, at least where I am. So,
Yeah, same thing here. Like the housing market in Florida has certainly softened,
yeah,
right? I mean, it's just they went spectacularly high before, so it's just outrageous. But it's certainly softened, and I don't really, I don't see, I just don't see the market staying up, the housing market, and I don't see jobs rebounding in any real manner. I mean, right now they're faking the numbers by saying that the illegals taking the jobs are you know the Americans having still kept their positions, but that's just not the case.
yeah,
I don't see, I just don't see how any of this is going to be rectified. You
yeah,
know, I don't care who the president is,
right.
right? I don't really care who the president is. Both scenarios are, one stagflation with Biden, the other one's another round of inflation with Trump by what he's by the rhetoric he's putting out there. So I'm very down on 2025. Put it that way.
Yep, that's right. I think you're right. I think it's going to be fairly difficult. So, okay, Albert, let's just leave it at that. We'll make it a quick one. Thank you so much for your time. Really appreciate it, and have a great weekend, a great week ahead. Thank you.
Thanks, Tony.